Hey guys, how's it going? Solo back at it with another video, 2 in 1 day. And I just want to give you a quick heads up. We are halfway through the month of November and there's not that many slots left in our Discord server at the special November pricing. So if you want to get in, now's your chance. First come, first serve. Let's get right into the video. And I wanted to do a couple things today. In this video, I want to talk about the overall market. So I want to talk about SPY and the S&P 500. And I also want to talk about why I am actually pretty scared about where the market is right now and how I think it seems like, or at least the data would suggest, that we are gearing up for another big sell-off. So put on your tinfoil hats and let's get right into it. I want to start off by showing you some data that I came across online. And then we'll finish off the video with some updated technical analysis on SPY, the S&P 500 ETF. So I was cruising through Twitter and I came across this graph, which was actually pretty concerning because this graph right here shows insider transaction ratio. So let's make this bigger right here. So what this is showing you is essentially a graph of insider trading. So anything above this dark solid line is going to be considered bearish trades. Anything below it is going to be considered bullish. So as you can see, in January, right around mid to end of January, before the market really sold off because of the illness, you can see there's a huge spike in bearish insider trading. So that basically means that the people in the know before it became public, they already knew what was going to happen in the market. So they got out before the market sold off. This is like the smart money, the big money, the institutional investors, the Congress people, they already knew what was going to happen. So they cashed out so that they wouldn't be caught in the dip. And now, if you look right now in November, we have another huge spike up, and it's even higher than where it was in the end of January. So we have this huge rise in insider bearish trading. So again, if you believe in that, if you have your tinfoil hat on, and you believe that these people know something that general Joe Schmoes like you and I don't, well, this may be a sign of things to come. This may be another instance where people with a lot more money than you and I know what's about to happen and are selling off again before another big crash. So this is making me take notice and thinking, you know what? Do I want to be with the smart money or do I want to be with the dumb money? So I am looking to go as much cash as possible right now, but this graph really scared me. So I went a little bit digging to see what other data I could come across. And then I came across this graph, which shows the top 5 stocks by percent of the S&P 500, the SPX basically, market cap, and at all-time highs. So in 2000, during the tech bubble, the top 5 stocks by percent of market cap of the S&P 500 were Microsoft, GE, Cisco, Intel, and Walmart. And take a look where that peak is. It's around 18%, okay? Right now, we are much higher than that. We're up to about 23%. And the top 5 stocks are Microsoft, Apple, Amazon, Alphabet, or Google, and Facebook. And I don't think this is a shock to anybody, but this is why I truly believe, and again, this is just my opinion, but I think we are in another tech bubble, and I think this bubble is even bigger than it was back in 2000. And this graph supports that, because look at where this peak is compared to where we are now. We don't even know if this is the peak yet. So I think personally that we just keep inflating this tech bubble. I mean, think about it. Just look in the past few weeks. What stocks have had these huge run-ups? They're all tech companies, right? They're EV companies. Nikola had a run-up, and don't even get me started on Nikola. Just last week, what was the other EV stock that ran up? You had Hyliion that ran up before that. Xpeng, I don't even know what Xpeng is, but that's now the new, seems like the meme hype EV stock. We just had NIO run up the past week. So everything is just kind of like the flavor of the week, it seems like. It seems like a group of people decide which new tech stock is going to be the hype stock or the meme stock of the week. They just run it up like crazy, and then they let it crash. And you just have to be smart enough to catch the run up, don't FOMO into it, and then get out before it crashes. I mean, how many tickers did that just in the past month? Look at Kodak, right? That was another company. Kodak came out of nowhere, had a huge run up, and then it just fizzled out basically. But there were people that made tons of money on a huge run up like that if you can catch it early and then get out and lock in profits. But this kind of mentality or this kind of trading is not normal by any means, right? So that's why I think we're just in a bubble. People are just pumping and dumping just random stocks, in my opinion. They tend to be tech stocks because they kind of give you that justification that, oh, it's because of the illness, so people are working from home. So now we're going to pump Zoom and DocuSign, and we're going to pump them to the moon because they're totally worth $300, $400, $500, and then they're really not, right? The PE ratio is not a justification of that. It doesn't really make any sense. But that's just my opinion. Here's another chart that I saw. This is the S&P 500 forward 12-month PE ratio, looking back over the past 10 years. So this is November of 2010, all the way on the left, and then basically present day up until about September, October of this year. And the 5-year average for the forward 12-month PE ratio was about 17.6. Okay, that's this green dotted line. The 10-year average is about 15.5. That's the blue dotted line. Look where we are right now. We are all the way up near almost at 22, right? So again, the S&P 500 forward price to earning ratio is sky high. It's, not double, but getting close to double the 10-year average, and it's pretty far above the 5-year average. I mean, just take a look at this graph. It's absolute insanity in my opinion. That's why I think we're really getting a little bit too peaky right now. I think we're topping out, and I would love to be all cash. I currently have 200 shares of AMD, and I have 90 strike covered calls that expire on December 24th. I'm actually thinking about rolling them down to an 85 strike because that's where I was assigned those shares at, $85 a share, and just getting out of the market. I don't know. I'm not saying that we're going to pop the bubble tomorrow, but it is now, before it was in the back of my mind, now it's more in the front of my mind. It's something that I'm always considering now every time I open a new trade because I don't want to bag hold a huge market sell-off like we had in March, because I don't think if that happens, we're going to recover as quickly as we did earlier this year. I think this time around, if we're going to recover, it's going to take years to recover, in my opinion. And if you don't believe me, let's just take a look at the daily illness graph on Google right now. So here's the number of newly reported cases per day in the United States. We are at over 150,000 new cases per day. That's more than ever. Back during peak illness season, early, late March, early April, we weren't even at 50,000. At our peak, we were a little over 50,000, let's just say around 70 to 80,000 per day. We are almost double that now. So there's no signs of slowing down. I mean, look at this. Unfortunately and sadly, this graph has basically gone parabolic. It has no signs of plateauing or dipping down right now. So I'm not trying to be a perma bear or scare everybody. I'm just showing you the data that I've come across and just explaining the reasoning why it's scaring me. And here's the other thing. If President-elect Biden gets into office sooner rather than later, it looks like his task force doctor says that a 4 to 6 week lockdown could control the pandemic. So I don't think this is going to happen before January 20th because he doesn't take over control until then. But I wouldn't be surprised if at the end of January, once he does have the authority to, he will try and convince states to do another 4 to 6 week lockdown if that's what his task force is telling him to do. We know based on the campaigns that he is always trying to listen to the science. And if this is what the science is saying, we may have another lockdown. I mean, obviously, as the president, he can't enforce that. It has to be on a state by state level, but I'm sure he can try and encourage states to do it by presenting them with the facts if that is actually true. So again, if the market shuts down, I don't think the stock market is going to look at that favorably. So At the very least, I would love to be as much cash, if not all cash, by mid-January before President-elect Biden takes over, because I highly suspect that unless things get under control, he is most likely going to want to lock down the economy again. I don't think President Trump is going to lock down right now. Seems like he's basically checked out. We don't have any more press briefings or any updates as to how his administration is controlling the situation, but so be it. Just these facts alone are why I am concerned. So let's end this video by doing some updated technical analysis on the S&P 500. So here's my TradingView graph on SPY. You can see we haven't updated this in quite some time. I'm going to move this Fibonacci level because it was drawn from the recent lows during peak illness to, at the time, the recent highs back in early September. But I think what I'm going to do is I'm going to change the low from the most recent low, which was right around October 30th. So I'm going to move this to the intraday low right about there. I'm going to make the peak, the recent peak, which was right on November 9th. So this is what I'm going to use as my new Fibonacci retracements. If you're new to the channel, these are daily candles. So each candle represents 1 day of trading. The orange line represents the 21-day moving average. The pink line represents the 50-day moving average. And I had drawn these yellow lines, which were previous areas of support and resistance, to see how well they've held up so far. Looks like they're holding up pretty good. You can see this wick here on November 10th, pretty much this week here on November 12th, bounce right off this area of support that I identified around $350 and some change. And actually, interestingly enough, just looking at it right now, on Friday the 13th, this intraday wick bounced perfectly off what is now the 23.6% Fibonacci level at just about $354.50. So this is probably going to act as support right now. So I'm very curious to see what's going to happen when we open trading tomorrow morning. Is $354.50 going to hold us support? And are we going to keep continuing up? Or are we going to break back down because the next area of support that I have identified is around $350 and some change. So quite a few bucks away to drop. But let's just see what the trend line is looking like, because we have been in a downtrend, but since about October 30th, we have now reversed it. We've had a lot of choppy trading. You can see there's a lot of gaps between these candles. The wicks are very long, so there's a lot of swings, big swings during intraday trading. But you can see from where we opened and where we closed, the candles are not that big, except for on November 9th where we had that big sell-off. I would say the trend line probably looks something like this right now, compared from October 30th to November 13th. So we'll have to see. If we continue green tomorrow, I would expect SPY to go up to about 356, 357 or so. But like I said, with all this bad news coming out, I'm going to be very impressed if SPY continues to rally. The other thing is that supposedly tomorrow morning or tomorrow at some point, Moderna is going to release their vaccine results. And the rumors say that it's going to be just as good as Pfizer's vaccine, and it does not require the cold temperature storage, or it doesn't need to be kept as cold as Pfizer's vaccine does. So if it has the same efficacy, but does not require, special storage or transportation requirements, then Moderna may have the better vaccine. So keep a close eye on Moderna stock, and hopefully that might be the news catalyst that propels the market upward. But again, this news has already been out towards the end of last week, and I showed you in my video earlier today that Moderna stock has had a run-up for the past 3 days. So it may be a buy the rumor, sell the news situation where it's already priced in at this point, and maybe tomorrow, even if the news comes out, maybe there's just going to be profit taking or a selling off a little bit of Moderna stock. So tomorrow's going to be an interesting day. I think this week is going to be an interesting week because every day we've unfortunately been setting new all-time highs in terms of daily illness cases. So at some point, if this trend continues, it just seems like it's bad news after bad news after bad news. So how long are we going to prop up the market, right? We'll have to wait and see. But obviously, none of this is financial advice. I'm just explaining to you my opinions and the data that I've come across. Hopefully, we all make money, whether to the upside or to the downside. But just be cognizant right now, me personally, I basically have 1 foot out the door and I'm ready to run away as fast as I can at the first sign of a little bit of weakness in the market. So that's my video for tonight. If you have any questions or comments, leave them below. If you agree or disagree with me, let me know in the comments below. Last reminder, only about 2 weeks left for our November special for the Discord server, so make sure you get in there now if you want to get in there to lock in a low price forever. And as always, happy trading.